All right, never a dull moment. And for Canadian investors, a lot to chew on when it comes to Canada itself. First of all, we got a better than expected jobs report this morning. More on that in a minute. But the other factor we're watching is on the trade front, with U.S. President Donald Trump saying the U.S. will slap a 35% tariff on imports on Canada effective August 1st. There would be an exemption for goods that comply with the U.S.-Mexico-Canada agreement, but the White House says that could change too. For more perspective on all things economic related in this country, we're joined now by Earl Davis. He's head of fixed income and money markets at BMO Global Asset Management. Earl, it's nice to see you again.
Always a pleasure.
Okay, why don't we start with trade? Because, we got this letter sent from U.S. President Donald Trump to our Prime Minister Mark Carney overnight, and everybody's trying to figure out what happens next. How have you been thinking about this news?
Yeah, what's interesting is our view, or my view, is totally different from the consensus. I think this is actually good news for Canada and will have minimal impact on Canada. So why is that? This will have minimal impact on Canada because it only impacts 5 to 10% of goods. Most of the trade with the U.S. is under NAFTA or CUSMA. That's 90 to 95% tariff-free. But why this is good news for Canada, it emboldens our politicians to get intra-provincial trade deals as well as international trade deals and to diversify away from the U.S. So I actually think this is good news, has good news going forward. I think the main thing is just to get certainty. Whether it's 25% tariffs, 0%, it's just to get certainty so we could get long-term investment going. And I'll just close that with a good analogy here. I hear a lot of people saying it's like Canada's taking all these heavy punches to the head from this heavyweight fighter, the U.S. Kind of true. I look at it more like Muhammad Ali rope-a-dope against George Foreman, where he was the big underdog against George Foreman, and he won that match because he used the ropes of the ring to take all the power out of those punches, and that's what we have with NAFTA right now. So yes, we need an agreement with the U.S. I think the announcement last night has minimal impact on our investment theory going forward.
We need some kind of Thrilla and Manila terminology for Canada-U.S. trade tensions. Just as an example for the audience, so let's talk about cars. So Canada, I believe, is by far the largest foreign market for U.S. vehicles. But given the trade deal, an integrated sector like the auto industry, like the existing arrangements would be protective to a certain degree from.
Yeah, so a few things there. Not everyone's going to be a winner. There's going to be winners and losers here. I think in general, the Canadian economy benefits from it. But this is why I say we need certainty as to what are the tariffs, what will they be. We've heard, like Toyota is a prime example of that. They're reconsidering or looking at their Canadian strategy, but they're unable to make a decision until they know the economics of building cars in Canada or expanding the plants. So we need certainty so businesses can make choices. As many businesses as may move away or decline their activity in Canada, more will come in. We have a lot of things that the world wants based off of commodities. Now refining those commodities, getting them up and trading them, that could be significant. AI, we're an AI leader in the world as well, too. That is significant. So, yes, there will be some losers, but there's going to be as many winners.
Okay, let's also tie in the fact that this news comes as we get a jobs report where Canada unexpectedly added more than 83,000 positions. So that's the biggest monthly job gain we've seen so far this year. What was your take on that?
I think I said the word "ay caramba" when that came out.
Boy, your pop culture references are through the roof this morning, Earl.
Yeah, I think, the headline number was shocking, 83K, when people were expecting 0. But when you look into the details, 90% of that was part-time, so it's less significant. Having said that, full-time was up as well, 10K. So how do we look at this? I think this still reflects that the U.S. economy is doing well. The trade data that we got a couple of weeks ago pointed out that, yes, trade with the U.S. is declining, but it's still 68% of our trade. Yeah. So as long as the U.S. is doing well, and we're seeing their numbers very resilient, very supportive, the deregulatory thrust, we will do well as well. How are we looking at this number? We think it, like the market, it reduces the probability of a Bank of Canada ease coming up. We were forecasting about 50 basis points, possibly 75 basis points of cuts
this year.
You know, I'll take that back to 25 basis points, possibly 50. So our expectation of eases is reduced by that number.
By 125 basis point cut over the course of the year.
Yeah, and the unemployment's a big driver of what the Bank of Canada will do, but so is housing. And that's the reason why potentially they could ease more, even though it's not part of their mandate, but they want to help support that market as well.
And I guess just to tie it back to the trade stuff, like Bloomberg in their reporting this morning highlights that in Windsor, Ontario, which is the heartland of auto production in this country, that just the uncertainty around what's going on the trade front. The unemployment rate has been rising there. So it was north of 11% last month. So one of the higher among large Canadian metropolitan areas. If there are industries that are impacted by trade and subsequently, you know, that means higher unemployment, you know, those are the kinds of things that also impact the housing market. And I guess we have to wait and see to a certain extent.
We will definitely have to wait and see to a certain extent. Hopefully it's not past August 1st. I know the target to getting a deal by Prime Minister Carney is, I believe, July 21st. This deadline for tariffs is August 1st. After that, we have some certainty. I think one thing that we've seen through our government right now, they want the economy to function and to do well. I do put a lot of credibility upon Prime Minister Carney based on his time as Bank of Canada governor or Bank of England governor. He understands the economics of a country and what it does, and I do believe they will do the right things for the different areas.
Okay.